Hey, everybody. Chris Scott here. Welcome back to our podcast. I'm really excited about today's episode. But first off, I just wanted to say thanks so much for the feedback over the past couple of weeks. I've had a lot of people reaching out and telling me that they're enjoying the podcast so far and the content that we have. So, very much appreciated. And today we're kind of pivoting a little bit. We're actually have our first guest that we've had on the podcast, and I couldn't be happier to have this distinguished gentleman across from me here. We're going to be talking a little bit about the commercial world and what the commercial real estate in Ottawa is looking like right now. He's also going to share his story about building his home in Westboro and kind of what that process looks like from start to finish. So if anybody had a dream of building their own house, he can maybe shed some light on that. He has sold over $2 billion in commercial real estate, which is a pretty crazy number, almost unfathomable for a residential guy like me. And he's one of the top brokers in Canada, part of his national sales team. I'm really happy to have Mike Pyman with us today. Mike, thanks for joining us, bud.
Thanks for having me.
Yeah. I was poking around your website yesterday, and first of all, I love seeing that youthful picture of you.
It shows you what the real estate market does to you.
That's right. I keep my picture from 15 years ago, too, on my cards. But seeing that the clients that you have, it's really interesting to see the corporations, the massive corporations that you call as clients. Like, how did you get in this commercial world? Like, how did you start in commercial real estate?
Uh, I think, like a lot of people that got into real estate, I graduated from university with an economics and business degree and kind of didn't really know what I wanted to do next.
Okay.
And it was actually a friend that I was living with at the time. His dad owned a real estate appraisal firm.
Oh,
And
is that Pigeon Roy?
that's right.
Yeah,
Yeah,
yeah.
yeah.
Okay.
You remember that?
Remember those days.
So I started in appraisal, so valuation
Yeah.
advisory for residential, and graduated into commercial. And then yeah, I just met some brokers along the way who kind of said, you've got the personality and the skill set that you should be looking at brokerage as opposed to advisory work,
Okay.
and made the leap 15 years ago to join Colliers. They had a hole. They were trying to expand their investment services platform across the country, and they
Okay.
needed a couple of guys in Ottawa. And there was one of my friends at the time was working there, and he wanted to start it up with me. So I
Cool.
went over there.
Good for you, man.
Yeah.
Yeah, I mean, it's been pretty cool. I've had kind of a front row seat at seeing your evolution in that. I mean, it's a really, really tough industry to get into. Probably one of the most challenging industries to get into because, as far as the big players in Canada, there aren't many, right? Like in terms of the top brokers. So, and seeing that it's kind of like a feast or famine, eh? Like in that world a little
Yeah.
bit.
Yeah.
And,
I mean, it's like any, it is a sales role. So it's like any sales role. There's a big ramp up. I think it's a little bit longer than a traditional sales role or even in the residential real estate side. So
yeah.
when you say feast or famine, there was a lot of more famine than feasting, I would say, especially in the first 5-10 years. So
Yeah.
I would say for anybody interested in getting into commercial real estate, make sure that you've got your financial house in order.
Yeah, that's
And
my advice even on res too when I
yeah,
talk to people. Like you need 6 months worth at least of, expenses and all that stuff put in the bank.
yeah. Well, for in my case, because we were kind of starting something new at Colliers, we've traditionally been a leasing brokerage, and then we were looking to expand our investment arm. That ramp up was a lot longer than I had anticipated, so it was
Okay.
more like a 4 or 5 year really ramp up till the motor's running at full capacity. So
Yeah.
yeah, it was a tough slog, but I'm happy I did it.
Yeah.
It's worked out pretty well.
Do you remember your first deal?
You know what? I was racking my brain about this morning. So I'll share two.
Okay.
One is what you would expect. It was a small little infill commercial lot, actually just off Preston.
Okay.
Um, a friend of ours slash client, he was a developer, sort of had this little lot, couldn't really make sense of what to do with it. From a commercial perspective or a multifamily perspective, and he just said, "You know what? I'll give you guys a shot. You seem like
Yeah.
nice guys." He knew my partner more than me at the time.
Okay.
but there was some family ties there, so we took it on. It was probably a $500,000 little lot
Okay.
that we sold. But we actually did get lucky in our first year. We sold, which is now the Andaz Hotel.
No
It,
way. The
yeah,
land?
yeah. Well, there was actually an office building there.
There's a
That there
is that
was
where the bar, that nightclub was, that, El Caliente? Or
no,
no?
no. It was actually an insurance company that owned their own
Was there a
office building.
bar on that street at one point? I remember, like, what was that? There was, like, right at that corner. I thought it was part of that lot,
Yeah, yeah.
and
No,
Honest Lawyer was on the other side.
that's kitty corner to where
Yeah,
the
yeah,
Andes
okay.
is, and then where they're building their second tower. But
Gotcha.
where the Andes sits was an office building. It was in receivership. We had to go down to Toronto. There was probably 10 guys on our pitch team,
Okay.
and we got into it by literally
It's a lot of guys to
yeah,
have on
it
a
was
pitch team.
ridiculous.
That's
It was
actually
ridiculous.
I'm just imagine you guys all coming into a boardroom with your suitcases
We
ready
we
to pitch.
outnumbered the clients, like, I think it was like 3 to 1.
It's like
Uh,
you got the deal just by intimidation.
That's right. You signed here. And it was in receivership. We actually saw it in the paper. So Grant Thornton was the receiver.
No way.
The insurance company had gone default, and it was in the paper saying that this was going into receivership, and they were looking for brokerages. Called. They said sure, and went down to Toronto, pitched it, and we won the mandate. It was ended up being a $20 million deal.
Holy,
Sold
this is your first year.
yeah. Sold
That's wild,
sold it to
man.
Claridge. I mean, we had a team, so it wasn't just me, but
Yeah,
yeah,
yeah.
it was
But
that was a
still,
good feeling.
having that exposure, and you get that in your portfolio too, right off the get go,
Yeah,
gives you some
it
credibility
helps.
as a young guy. I remember, like, starting in real estate. I think it was my challenge was I was so young. Like it was 21 years ago where I started living in my parents' basement, basically, making deals. And I remember that was always, at least in my head anyway, like a credibility thing.
Yeah,
And to have a big deal like that off the bat, that's awesome.
yeah.
So you have that evolution. You go from starting out and having some success early, and now, like, when we've talked about some of your big deals before. Like, what's the biggest deal you guys have put together?
I think one of the biggest deals that we worked on started out as a potential um, sale, and then morphed into a 25-year lease and sort of built to suit,
Okay.
which was for Nokia, working on the deal for 4 or 5 years. But
That's in the Canada Tech Park?
yeah, that's
Okay.
right. So Nokia owns their own real estate in
Mhm.
there, and it was an aging asset. They wanted to build something brand new and world class and to attract talent, but they also had a demand for more lab space. So if you walk through their facility right now, they've just created labs out of office space. You'd be walking through, there'd be somebody's boardroom, and then right next to it is a lab. So
Really? Yeah.
yeah, so they wanted
That's
they,
interesting.
they wanted new, functional, and beautiful space. So soup to nuts. It's still ongoing actually, but it was a 5-year process. It start,
5-year process that you're involved in as a broker.
yeah,
That's wild, man. I can't
it,
even wrap my head around that.
and it kind of it was going to go ahead, then it fell back, then it was going to go ahead. There's all kinds of intricacies with dealing with a company like Nokia,
Yeah.
trying to get greenlit for a project that's $500-600 million is not easy, especially when you're dealing
Jeez.
with the geopolitical
Yeah.
climate, and the economics of it. So when you think of deal cycles, I mean, that's like 2 cycles. So trying to come up with a cap rate, trying to come up with values, revisiting those values along the way was a process. But that would have been a
You almost become an like an economist when you're dealing with these things, eh? Because you have to look at all that, and
yeah,
everybody's looking at the numbers, projections, and where things are going to be, and then you have Trump come in and like,
yeah,
okay,
just
what,
destroy everything
yeah,
overnight for no
yeah,
reason.
yeah,
Yeah.
yeah, yeah, it's wild. So when you have your big clients right now, when they're looking at Ottawa, like, what do they see? Like, what do people see when they look at Ottawa? Like the big corporations, like, are they buying in Ottawa right now? Are they selling in Ottawa? Are they holding? Like, what are they seeing when they look at our city and basically our local economy?
I think that traditionally what people see in Ottawa is a safe haven for investment
Okay,
because of the federal government.
stability.
Yeah, and so they see that as a hedge against other investments.
Okay,
If you look at Calgary or Edmonton, there's boom bust cycles, whereas here we have cycles. It goes up and down, but it's nowhere near as drastic.
Yeah.
Right now, there aren't a whole lot of institutional investment in Ottawa, and they're not really active right now. They're starting to talk about redeploying into our market.
Okay. So when
Um,
you say redeploying, so they were here at one point,
yeah,
and they've sold off, and they might come back.
yeah,
Interesting.
exactly. And
Okay.
so the institutional side of the business is very much a herd mentality. It's like a bunch of dinosaurs coming in. They sort of look around, then one buys, and then the rest of the pension funds and institutions see that and say, "Okay, I want in." They
Wow.
hold for a long time, and
Yeah.
then one starts to leave, and then they all leave. And
That's wow.
it's all
Interesting.
about market cycles.
Yeah.
They try and time the cycles.
Okay.
But
Kinda like what people are trying to do in the stock market, like
yeah,
you try to time the cycle or
just
whatever, yeah.
longer term.
Yeah.
And that's what institutions, their whole thesis for investment is, where can I deploy my capital that's the least risky with the highest return. So right now they're really not looking into Ottawa as sort of a stable growth market. They see it as a bit more risky because of what happened with COVID and everyone leaving the downtown core, and
Right.
back to work
Mm.
strategies, not really fully baked yet. Now, the flip side of that is because they've left, because there hasn't been as much interest in, especially office. Um, your ability to get into the market, your returns for your investment are quite a bit higher. So we're having more and more conversations with these institutions, life cos, these REITs that are now saying, okay, well, when I bought this trophy asset 10 years ago, I paid a 4.5% cap rate on it.
Yeah.
I can buy that now for 9%,
Wow. That
8.5%.
much of a
That's a good
change,
return,
eh? Why is it changing so much? Because people, like, see the risk involved in these acquisitions? Like, are you talking about, more office
Yeah.
or, like, retail or what classes right now, asset classes are strong? Are there any that are strong?
Yeah. Yeah. I would
Yeah?
say that
Industrial maybe?
from an institutional perspective and even across the board, I think what every single group that we've spoken to, their number one target is grocery anchored retail. So,
I would never have guessed
and
that.
if it's necessity based with grocery anchored, then it's top of the list.
No way, I would have never
Uh,
have guessed that. That's interesting.
yeah, you live through things like COVID, and you see um, the issues or some of the pitfalls that could be associated with owning something that you thought was foolproof. Like if I buy a downtown Class A office building in Ottawa, the federal government's here. They expand, they contract, but it's a downtown Class A asset. Well, nobody would have expected that COVID would come,
Right.
and basically the downtown core was a ghost town for like 4 years. I mean, I lived through it. I worked through it.
Yeah.
There was the occupation, and then when all the truckers left, then there was just nobody. There was nobody downtown
Yeah.
for years.
Weird.
The government all went home and they didn't
Yeah,
come
yeah.
back.
And you were, soldiering on it, basically had the building to yourself probably,
Yeah,
eh?
yeah. I sat there looking out at all the big trucks that honking their horns all day long, just like,
God,
what
that's
world am I
gee
living
I
in? Like,
know.
how can you predict that?
Yeah, of
So,
course not.
so institutions look at that. It's not a private investor. These institutions say, okay, well, I have to safeguard against something like that again. So,
Yeah.
if I'm going to park my capital and I'm going to get something that's not double digit returns, I'm going to put that into grocery anchored. Grocery stores stayed open the entire
Yeah, yeah,
COVID
yeah.
pandemic,
Yeah.
and necessity based retail,
Yeah.
and that's what I'm going to invest my money in. Or, for a long time it was industrial, because there again, supply chain issues kind of lagged the whole market. So industrial became very popular. There was more big logistics facilities being built in North America as opposed to all around the world in China, and as
Mhm.
people were relying on product that was manufactured and housed in North America because of the supply chain issues.
Right.
So investors looked at, okay, well, I, I like this real estate. It's new, it's shiny, and it's being occupied by these big, Amazons of the world.
Yeah.
That became a safe haven for investment. Now
That
that's kind of fallen off a bit, but
that's really, really interesting. So when you think of, like, the commercial real estate, and I'm so curious with this because, you know, I feel like you guys have a longer term view of our local economy than maybe say residential guys are looking, a year out type of thing. Like, where do you see things going in the next 1 to 3 years in Ottawa for that type of investment? Like, do you think we're going to be in a good spot or challenging or what? And are interest rates going to play a big role in that?
I think interest rates have normalized now. I
Yeah,
think that was one of the biggest issues with our market over the last few years was uncertainty kills all momentum in the market, kills transaction velocity and
a-
deals,
and
right?
it does in residential
Right,
too. Just so
exactly.
you know, yeah,
Yeah. So whether it's going up or going down, you don't want to be wrong on the upward or the downward.
yeah,
So people
yeah.
wait. And I think that's traditionally what's been happening is there's been a lot of investment sitting on the sidelines waiting for the opportune time. I would say that the fundamentals of investment in real estate right now are good, are strong, but I don't have a crystal ball now. And I think that's the issue is interest rates have finally normalized. We know where that is. We know where
Yeah,
that's going.
right.
Geopolitically, our world is a mess right
Yeah,
now.
yeah,
So
yeah.
people
It
like,
is a mess, right?
investors don't like, there's so much volatility in every single type of investment vehicle right now that it shies, especially the big institutions from making large, meaningful investments into Ottawa or other markets. Transaction volumes have been down for the last few years.
Right.
And players like Trump do not help the cause.
Yeah, yeah, yeah.
So I think a lot of people are saying, you know what, let's just wait it out and see.
Well, the problem is you gotta wait. I mean, it's another couple of years,
Well,
and
exactly.
that's and who knows what's gonna come there. Very interesting. And correct me if I'm wrong. Did you sell what's that hotel?
Shadow Gloria.
Shadow Laurier. Were you involved in that? I
I
remember
was,
you
yeah.
talking about that a while ago. Yeah, walk me through that. I'm curious. I mean, that's obviously a landmark, not only in Ottawa but in Canada. So, like, how did that deal go down?
So that was so we have a hotel team, which is the best hotel team in the business.
Okay.
They transact across the globe, but they're very strong in Canada.
Oh, interesting.
And
Okay.
it was their opportunity. They had the relationship with the previous owners.
Mhm.
They brought us in as sort of the local boots on the ground, which was very interesting. It was pretty early on in my career. I think the deal traded 10 years ago now.
What was it? What was the price? Do you remember?
It was like $175 million. It was a big
Holy jeez, man,
it
that's
was
wild.
a big deal. Yeah,
Yeah.
yeah, and it was
So
it was very interesting.
okay, so that's 10 years ago. What's that building worth now? Like, has it changed a lot? Like that's a huge number, I would think now,
Mhm.
right? Like,
It's probably in the 200 millions
yeah, yeah.
now.
Okay.
They've done some investment to the property. Well, as you know, I mean, if you go try and find, you were just in Milan,
Yeah.
trying to find a hotel, you know, for anything less than $500 a night is a challenge,
Yeah,
right?
yeah.
So 10
Well, in
years ago,
Milan, it was
yeah,
impossible.
yeah, yeah, yeah.
Yeah.
But 10 years
And it was in
ago,
euros too, so by the time you convert it back, it's even worse, but
yeah,
yeah.
yeah. So 10 years ago, I mean, that property, you could probably get a hotel room at the Shadow, I don't know, 10 years ago for $250 a night, maybe.
Yeah, yeah.
That
Interesting.
I haven't tried to stay at the Shadow for a long time, but I've stayed at crappy hotels for my son's hockey and
You know where I stayed last
volleyball.
time in Ottawa was, Andrew, this is, you going years back, but we stayed at the Andaz. You were talking about the
Oh,
Andaz
there
earlier.
you
We
go.
stayed at the Andaz, and, that was a pretty neat little hotel. I
Yeah.
like that they got a rooftop
So what
terrace
did that
there.
cost you per night?
Oh, I don't know. I think it was a birthday gift, actually. It was probably $250 or something like that, and a pretty reasonable room. I always thought there's room in Ottawa. Maybe it's not. I mean, like going to Milan and seeing all the hotels, and it's such a high-end city, like all the top, whether you're in fashion or hotels or whatever, all the top brands are there. And I always wondered if Ottawa could like have like a I know Shadow's a great hotel, and hey, they got the West. I used to work at the Westin, but I'm wondering if they could really have like a true five-star hotel, like a Four Seasons or something like a class above. Do you think they could? Like, is there enough luxury in there? Like, do you guys ever talk about that in your hotel division?
Yeah, yeah.
Yeah.
We have a client that is building a hotel right now on Albert Street. And he was looking around the market to bring a Four Seasons.
Okay. No way,
Couldn't
really, eh?
couldn't find the right property. Yeah,
Okay.
yeah.
Yeah, I don't feel like Albert Street would be a
No,
Four
that would have been the right
Seasons.
one.
Yeah.
He was looking in the
Mind you, the Four Seasons in Toronto is, like, not downtown. It's, like, outside York is it,
yeah, Yorkville.
Yorkville?
Yeah,
Yeah.
we don't have a Yorkville.
It's true. Yeah, good point.
I don't know that our market could support it. I mean, like
Yeah,
if you're looking at, that would be like sort of a once a year, if that type of hotel for a lot of people.
right. Yeah, I
I
guess
don't know that we have enough
a lot of government
people.
people aren't staying there either when they're
No,
coming into
exactly,
town, right?
exactly. And then, a lot of people that are coming into town for conferences are actually, quasi-governmental or lobbyist groups or whatever. That's sort of our main draw. I don't think those people are going to stay at a Four Seasons either. So I don't know that we
Right.
have the market for it, but
Yeah.
I would love to see it.
Yeah. Well, because a lot of those hotels now, like the Four Seasons in Montreal, we stayed there before. It's a beautiful hotel, one of my favorite experiences. And it's not a big hotel, like it's a big building, but it's not a big hotel. Like there's not, I couldn't guess on how many rooms, but half of it were condos,
Mm,
right? So a lot of mixed use. A lot of hotels are going that way where
mhm.
they're building condos alongside having some hotel rooms and then having all the amenities, obviously, as a hotel for your condo, which would be pretty neat.
Yeah.
So switching gears a little bit, I'm so intrigued about this building process. I mean, I think a lot of people kind of imagine building a house sometimes, like building their dream house, and
It's
you're
not a dream. It's a
yeah,
nightmare.
exactly. I feel like you've been at this for a little while now. You're still not in there.
A couple more gray hairs.
Yeah. So I want to learn a little bit about that. I want to learn about that process. So obviously you guys have a beautiful house right now, and you wanted to get something maybe a little bit larger for your growing family. So what does that look like? Like, were you looking for a while for the perfect lot, or like, and walk me through like how long? Because you're almost done. I took a walkthrough a couple of weeks ago at your new place. We're gonna have a walkthrough today. It's gonna be unbelievable, by the way. But you're almost done. But it's been a process, right? Like, when did you start the process?
I mean, this one was kind of a out of necessity, I guess. I mean, I love our place.
Hmm.
We built it with my wife's sister and
Right.
their family. So we built this. We bought an old post-war bungalow and then built two semi-detaches, and so they lived there with their three kids that are similar to our kids' age. It was great, but they were running out of space and they wanted to live out in Manotick, so they left, and I wasn't all that thrilled about having somebody I didn't know live,
Right next door
share
to
a
you.
wall with me.
Yeah.
It was one thing when it was family, although that has not been an issue. The family that moved in next door is great, and they have a young daughter that's about my daughter's age. It's been perfect. But during that process, when they sold their property, my sister-in-law, a lot literally across the street and over from me, so it sides onto a massive hydro easement, which is sounds scary, but it's just a big open field.
It's a
We
corridor.
we are right on an open field, and the kitty corner to us came up, and that doesn't come along too often. And it was kind of a perfect storm. It just kind of, first of all, I see it out my window every day, the sign go up, and I'm just like, what's going to happen over there?
Interesting.
My sister-in-law had already just moved out,
Yeah.
and I just thought, you know what? We were looking to move. We were kind of growing bigger family, and short on space. So I bought it, and I didn't really have a full plan baked yet. I was looking at maybe doing a larger
So you,
semi.
so you bought it without even knowing what you're going to do with it.
Yeah, I mean, I ran a
That's
bunch
a
of different scenarios.
power. That's a power move, man.
It's 800 grand, whatever.
I'll take it.
No, I mean, I ran the scenarios. Like, I looked
Yeah.
at zoning, and I looked at whether I could do back-to-back semis, side-by-side semis, a single. I think the biggest, we were looking to do not a forever home, but the next step.
Okay. Gotcha.
Yeah, so bought it, closed on it, and it's we're about 90% complete. Probably be moving in May, so
Awesome.
it's been good.
Okay. So like, how long is it taking you to get to this point? How long does it take to get to 90%? Like, has it been a year or like,
Um, It took a little longer than anticipated.
Did you have to go through committee of adjustments?
No, so that's the one thing we had to go through committee of adjustments on our semi, and
Oh, I
it
remember that.
was
It's a nightmare, right?
complete disaster. The entire neighborhood showed up with pitchforks. Get out, not here.
Yeah.
Uh,
Yeah, not here. Like, go down the street. It's everywhere.
Literally,
Yeah,
yeah. I mean, it's funny because we thought we did the right thing there, whereas we walked around the neighborhood, we
yeah,
showed them our plans,
yeah,
our floor plans, exactly
yeah.
what we wanted to
A lot
build.
of people don't realize that you have to do that. You have to kind of rally your neighbors a little
Yeah,
bit, right? Go meet them.
but it didn't seem to matter. We did that to our face. They were like, "Oh, okay, great." But um, originally we were looking for a height relief, I think, of like 1 meter.
Okay.
And that was it. We weren't building into our side yard. We weren't going into the rear yard. We were just looking for a height relief because we wanted to have 3 stories all above grade.
Right.
Um, and yeah, the neighborhood did not respond well. We had ward counselors, ward counselors from the wards next to us. All the neighborhood showed up, and
Wow.
they did not like this. We had to change our design all around. We dropped the property down a bit. We dropped our ceiling heights. We re-engineered the floor joists, and ended up we finally landed on 11 inches of relief, which the committee granted, but the neighborhood still showed up and opposed it.
Wow.
So on
That's
this one, I
wild,
did not
man.
want to go through that process. I didn't. I
Yeah.
had already ruffled too many feathers, so I was like, you know what? I'm just gonna.
Well, yeah, because it's the same neighborhood.
Exactly.
It's right across the street. Hey, it's me
I'm
again.
a glutton for punishment. I think I am actually. That's my friend. But I just said we're just going to build this, literally under what's allowed for zoning.
Okay.
And
Well, I
so
guess doing a detached, you have a little bit more ability to do that too.
Yeah.
Probably, right? Yeah.
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 But yeah. So typically, I mean, I think the biggest thing is like hire a builder. We hired Maple Leaf Homes. They've been great. They built our current house.
Yeah.
They're building this one.
What makes them great? Like what should people be looking
Well,
for?
I
in
mean,
a
they
builder?
have their own in-house designer. They have their own in-house architect. So helping you come up with
Really,
a
eh?
plan.
Okay. So they work. So you basically would you say you designed that house and like you just
I,
gave them kind of what you wanted?
I
And
gave them what I wanted
no way.
on the
That's cool.
ground floor,
Yeah.
on the second floor, and in the lower level. I gave them the general aesthetic of what I was going for.
Okay.
And then they came to me with the plans and said, like, what do you like here? We made a couple revisions,
Yeah.
forth, and then they set the budget based off those plans.
Okay.
And so it's
Okay. So they set the budget. Now looking back on that original budget, was it was it a pretty reasonable budget, or have you guys gone way over? Like, or are you still on that?
no, I mean we're over budget.
Yeah.
But I like their budget was very reasonable. We
Okay.
splurged on a couple of areas. We put a little bit more cabinetry in, a little
Okay.
more custom built-ins than
Yeah.
what was budgeted for, and we chose really expensive hardwood, and there's hardwood throughout the property. So
Like upstairs too.
yeah, upstairs,
Oh, nice.
downstairs. So
You know what? That's something that you should
yeah,
upgrade.
yeah,
Love a good hardwood. That
yeah,
makes such a difference, eh?
yeah,
Yeah.
yeah.
What'd you go with? Like kind of wide plank?
It's a wide plank white oak, but
Yeah.
it's like the top grade that you can get. So there's
Yeah.
no knots, no imperfections. It's just
Oh, really? Yeah.
yeah,
Okay. So it's more consistent throughout,
that's right.
which I like. Yeah.
Yeah. I mean,
That's
at the
awesome.
end of the day, it
Is the
was
floors down? Are they down now?
yeah, they're down,
Okay.
they're in. Yeah, so we'll take a look.
Yeah.
I think at the end of the day, it was the right idea, but the right call, but it ended up costing like quite a bit more for the hardwood. And
Okay.
because it's everywhere, it kind of blows your budget a bit.
Yeah. Okay. That's really interesting. So getting a good developer like Maple Leaf, they obviously know what they're doing. They've been around for a long time.
Yeah.
And
Good quality developer. I mean, listen, if you want to GC it yourself, all the power to you. But I mean, that's a full-time job, and
yeah.
you
Yeah.
need to have the contacts. You need to have the
Yeah.
patience. You need to know you need to know the contracts when you're signing these contracts with your HVAC guy, with your plumber.
Oh yeah.
Like there's so many pitfalls.
There's so many things that go wrong.
Change orders. Okay, well
Yeah.
now it's going to cost you double. Like if you have a builder, they take care of all that.
Yeah.
They manage that. They manage the trades. They slide them in when they need to be there, right?
Right.
They make sure that your plumber is done so that your drywaller can come in, and everything just kind of lines up perfectly.
Right.
So you asked about timelines. It would have been a 9-month process,
Yeah.
start to finish.
Okay.
We ran into a bit of a snag, and again, this having a good
What was the
lawyer.
snag?
Well, you would think that it's next to a massive hydro easement, open field with the big towers
Yeah.
that there wouldn't be hydro lines running on the property. Now, granted, there was a line on the west side of the property. The east side is the big easement.
Yeah.
Um, I assumed it was just a communication line. We all assumed that. I had our lawyer search title, nothing registered on title. Went through to
Like
get
no easements. You're
no
done.
easements,
Yeah.
nothing registered.
Okay.
So nothing that would red flag it.
Yeah.
Designed the whole property based on the zoning because there were no easements. And then went for approvals, and city came back to us. Actually, it was Hydro that came back to us. They had flagged it. They said, actually, that communication pole is not a communication pole. It's an active hydro line. And, my initial response was,
Wow.
well, it's not registered. So,
Yeah.
well, you're encroaching on the vertical plane that's surrounding this line that's active. And so you can't build what you want to build. Like,
Holy
what
gee,
are you
that's
talking about?
crazy news to get.
Yeah. So I
Yeah.
called my lawyer. I said, what is this? Like, can't we
Yeah.
not just tell him, like, okay, fine, we'll let you keep your hydro line there, but you didn't register it. You didn't have to pay an offset for it.
Yeah.
It's not anywhere on title.
Yeah.
We're going to build our house the way we want to build it. We won't touch it, but we're not going to give you your easement so that you can come in with a truck and maintain it. And, the lawyer was like, we can do that, but they're a public utility. They can basically do whatever they
I
want.
think
So
crush you. Yeah. Yeah.
they'll bleed you out,
Yeah.
and then they'll register their easement.
Yeah. And
Oh,
you'll be 2 years down the road.
that's right. So,
Yeah.
I think you should play ball with them. So we
Yeah.
ended up having to move the building over, change the roof line,
Okay.
and drop it down a bit in order to satisfy their requirement. So
Okay.
that added another 4 or 5 months,
4 or 5 months just on that.
just going back and forth.
That's wild, man.
Yeah.
Yeah. Yeah. You
So
gotta have a
it's
lot of
been,
patience doing that.
well, and
If you're gonna
carrying
build it yourself,
costs
yeah.
and legal fees and, unforeseen, but
Yeah.
it is what it is.
Yeah. Well, it'll be all worth it, man. Once you're in there, you got the golf simulator going in the
That's right.
basement. I'll be worth it. Mike, appreciate you coming on, bud. This is
Pleasure.
you're the first guest. It's a big deal.
Hey,
Appreciate you coming on. And where can people find you?
you can go onto the Collier's website and search for Michael Pyman.
You see that
Uh,
handsome picture?
See that
The
the young Mike.
Zoolander.
Yeah, exactly. But you know what? I'm not on socials. I have my LinkedIn.
God, I love that about you, man. You're probably at this point, like aside from like older people like my parents and stuff, even my mom's on Instagram. Like you're one of the few people I know that's not on socials. Keep that up, man. It's a waste of time.
Yeah, complete waste of time.
Yeah.
Yeah.
Yeah. Awesome. Well, thanks again, bud.
Yeah.
Appreciate it. And thanks to our listeners for tuning in. I hope you got some value out of today's episode, and we'll see you next time. Thanks, everybody.